Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at Dell, D-E-L-L, or Dell Technologies, Inc. Dell is an information technology company, primarily known for manufacturing computers, laptops, etc. Here's the barchart.com technical opinion rating for Dell. The bar chart rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that Dell is well above the moving average line, so the monthly trend in Dell is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started, so the daily trend in Dell is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. Dell is below the upper Keltner channel line, so Dell is inside the buy zone. Since the trend is up, we want to buy a call. Dell has plenty of option chains to choose from. We're going to use the June 21st option chain. Right now, the June 21 options have 53 days to expiration. Here's part of the Dell option chain for June 21. Dell closed at 125.06 on Friday. That means any calls on the list from 77.5 to 125 are in the money. Let's take a look at the profit potential for purchasing the 125 strike call, which is the closest strike to the current price for the stock. The bid-ask spread for the 125 call is 1080 to 11. We tried to enter at the midpoint, so we'll use 1090 as the buy price. Our call option calculator shows the profit potential for this call based on Dell price changes from at option expiration from flat to a 12.5% increase in price. We can see that if the Dell stock price is flat at 125.06 at option expiration, the 125 call will lose 99.4% of its value. This is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 105 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 105 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the Dell stock price is up 1%, the 105 call will lose 8.3% of its value. We want that to be break even or better, so the 105 call does not meet our requirements. Let's see if the 80 call will work. The bid-ask spread for the 80 call is 44.20 to 46.40. We tried to enter at the midpoint, so we'll use 45.30 as the buy price. The 80 call works. If the Dell stock price is up 1%, the 80 call will make a 2.2% or $101 profit. That's better than break even, so the 80 call is the one we'll buy. The call option purchase calculator also shows that if the Dell stock price increases by 2.5%, the 80 call will make a 6.4% or $289 profit. If the Dell stock price increases by 5%, the 80 call will make a 13.3% or $601 profit. If the Dell stock price increases by 7.5%, the 80 call will make a 20.2% or $914 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the Dell stock price does not make the expected move up and remains flat at expiration, the 80 call would only lose minus 0.5% or minus $24 compared to the minus 99.4% or minus $1,084 loss for the 125 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the Dell June 21 110 strike call and sell to open the Dell June 21 120 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 110 call for $18.90 and sell the 120 call for $13.45. $18.90 minus $13.45 equals $5.45. So the entry price or debit cost for the spread is $545. The call option spread analysis calculator picture shows that the spread will make an 83.5% or $455 profit if the Dell stock price declines by 2.5%, remains flat, or increases in price when the options expire. If Dell is down 7.5% at expiration, the spread will make 4.2% or $23. Creating the debit spread will allow us to collect a $1,345 cash credit to our brokerage account for the sale of the 120 call. As we said on the previous slide, this reduces the cost of entering the spread to $545. Here's a note regarding earnings reports. The next Dell earnings report is scheduled for May 30. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the Dell June 21 80 strike call for $45.30. We also reviewed a spread. The spread said to buy to open the Dell June 21 110 strike call and sell to open the June 21 120 strike call at a debit of $545. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.